Greetings, members, one and all of the Salivation Nation. Gold's breakout while the stock market is rising should concern investors, according to this opinion piece by MarketWatch. Let's explore. Yes, already the first sub-headline I already disagree with. But we'll kind of go through this and pick it apart and see exactly what this is basing their opinion on. Gold is usually used as a haven for turbulent times, but not lately. Well, I tell you what, it is a turbulent time right now, and it's not necessarily only because of economics. There's more to it than that. Momentum investors who are relentlessly pushing up stocks are oblivious to the breakout in gold amid a relatively rare event. Because of that, prudent investors should pay attention. Let's explore the issue with the help of a chart. Well, that's something, maybe he's familiar with me and using the let's explore saying here, but let's see what this chart says here. We see the annotations about the stock market going higher, some shallow pullbacks, and smart money buying at this particular time, stronger dollar, and the breakout, but no new safe haven event. I would disagree with that. I think there is a safe haven event. He says their following shows that the previous resistance line, which has now become the support line. It also shows a technical breakout in gold. This is positive for gold, but negative for stocks. The chart shows the breakout occurred after two shallow pullbacks. This is positive for gold. The chart shows that the breakout is occurring on four rare things coming together. Gold is priced in dollars for this reason. When the dollar rises, gold falls. Lately, the dollar is becoming stronger, but gold is jumping instead of sinking. Typically, gold goes down when the stock market goes up, especially if there is an aggressive increase in the stock market, as has been happening lately, although not at the recording of this video. However, gold has broken out as the stock market has ascended. Gold typically goes up when there is a new safe haven event, such as war. Here, gold did not break out on the emergence of the hops and barley and rye beverage that we're seeing lately. I've got to be careful with the language there because the demonetization police at YouTube will hit me if I say that word. However, now that this particular scare has been subsiding, and it's not, I don't know when this was written, gold is breaking out under these circumstances is rare. It is not subsiding. In fact, it's increasing as of the recording of this video, but I say that to give a timestamp because it does change from day to day. But that's just it. War is not the only black swan or geopolitical event that can happen. This is a geopolitical event. It happens to be of a medical nature, biological nature, and which obviously, like war, can affect economies. And so domestically here, especially considering that this particular situation is regional at this point for the most part, and there's obviously conflicting information coming out about it even to this day, to the severity of it. Essentially, it is not spread out beyond certain areas, and is contained in others. And so therefore, it doesn't necessarily affect the stock market here in the United States because there's literally, at least last I heard, less than 20 cases here. So it would make sense in a way because of fear of what's to come and how economies can be affected, especially with trading partners, newly signed Phase 1 trade deal trading partners. Anyways, it goes on to say the smart money professionals has not been buying gold until now, but it has jumped in with light buying. This behavior is rare as the smart money typically buys on pullbacks. So in other words, this is a very interesting statement because if they're saying that people are dipping in now, they're seeing something that necessarily the stock market isn't seeing at times. But as you see in the next a bullet point down here, we are seeing some movement downward. So the market is catching up with those smart money professionals that are buying gold. And we're seeing a drip there. So this is already kind of out of date. Talks about how investors should keep an eye on certain stocks out there. And it says that there's new concerns about this barley, this wheat, this hops, and malt beverage entity, this flu that is, and its impact on earnings. Investors should stay tuned on the news from that area as well as to earnings related announcements. So what does this mean according to the author? Stay cautiously bullish on stocks and consider adding gold, silver, and precious metal stocks on pullback in the broader market. I'm going to give the exact opposite advice to this because, here we are in the age. In fact, I've even heard recently that they're working on a vaccine that could be readily available within 24 months, possibly, maybe even sooner. But aside from that, if they do get this thing under control, well, gold and silver are going to go back down. And I posted a video recently about that very thing. The calm after the storm. That's the thing to consider here. And maybe we should pause on buying, because if this thing starts to get out of hand and gets worse, then we're going to have bigger worries than precious metals. We're going to be trying to do all we can to prevent the spread of this thing. But not only that, but there's obviously other factors that can come into play. I mean, there's a lot of moving parts to the sentiment out there, generally overall with the economy and what moves precious metal prices. I would say that at this point, the best thing to do is wait it out, hold it out. If you're going to spend a little bit of money, maybe buy a little bit of silver. And if you feel comfortable and you feel like the gold will go up, then maybe buy a little bit of gold. But I would encourage people to just wait it out for these kind of things. It's been sort of an ebb and flow here as of late. This news has not gone away. It continues to dominate headlines and probably will continue to until we really do see things. This is sort of like obviously it's a completely different kind of scenario, but the way the news cycle is reporting on it, it's sort of like the trade deal and negotiations on the trade and how that moved the markets here and there. People feel better this day and not so good the next day. And those are the kind of factors and things we have to think about. It's mostly psychological. And it's psychological in the interpretation of the markets and the real impact on economies right now. A lot of it hasn't been realized. It will be realized probably soon. It's going to have an effect. And by the way, I feel for anyone affected with this thing, one way or the other. It's a horrible situation. But by and large, the way the markets react is not necessarily the same as the situation on the ground, or at least the timing of it, because a lot of it is anticipation of what's going to be and what's going to come. And so people take that anticipation and either ease up or clamp down on where they're at as far as their financial security in those markets. And that is the controlling factor here for most of us in this situation. But I would say that the only concern I would have is just, where things are going, but I wouldn't buy out of panic or fear. I think that is not a wise move to make, even if you see, quote, other professionals doing it. Continue to press on as you are. And remember, every ounce of gold or silver that you have, or even quarter ounce of gold, that's more than most people have. In the listening audience here, you who are purchasing precious metals or have in the past are way ahead than many other people out there who are in the cultures that do listen to this channel. And by the way, there's also folks that are in cultures that do heavily invest in these metals or accumulate them for cultural as well as for financial reasons. So there you have it. Well, post your thoughts below. Very interesting indeed. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.